All right, guys, so I'm going to do a quick rundown of this back testing of this silver bullet entry method. So we have S&P last Wednesday, New York session. This blue line is your 9:30 New York open. The last swing high was this big push up here. So this is your buy side. And then we have relatively equal lows here is the first sell side, second sell side you can put underneath these lows because they're nice and pretty flat there, nice and clean looking. And then you have this gap, fair value gap also. Um, we could bounce up here, or we'll see how this is used later on. So if we move price forward, we're actually inside that 10 a.m. to 11 a.m. entry window that I'm looking for my buy model or sell model that ICT teaches on the 2022 mentorship. So we move price forward here. You see buy sides taken. So we're waiting to see if we get a break of structure and shift with displacement. And see we get big push up to the upside. Now this purple line is my midnight open price. If we're above this purple line, I'm looking for sells. We're underneath this purple midnight opening price, I'm looking for buys. So you can see kind of we're creating a narrative here. We're above the midnight opening. We've taken buy side. So sell side is next, meaning we're going to be looking to take some sells if the model presents itself. So we're just patiently waiting, and we're on the 1 minute time frame here. See, we get kind of a push here, but you want to wait for it to create a swing low because we don't have lows putting in. We have all this bullishness here, and the closest swing low would be down here, right, for it to break. So you want to see it create some new lows and start breaking those. So you want to see it come down, up, and then break down, which is exactly what you see here. Now, we had a small gap here, right? But we didn't have the lows put in place. So this would be very, very, very risky to get in on this gap here. So you're waiting. Now, as you can see, this low was broken by this low. And we have a small support kind of in here being formed, right? So now we know that this is kind of a break of structure. We're breaking in smaller time frame structure, creating lower lows, lower highs. You get a push there. Doesn't really break energetically to the downside, so there's no displacement there yet. You get another push here. It's pretty nice, but there's no gap, right? Another break here. No gap. Pushing down. Now there's our energetic push. You see how that filled at one point? So there's your market structure shift here. And it closed here, leaving this gap. Now it's not a big one, but we have everything lining up here. Big push, close below, create a gap. And then if you wanted to look at divergence on the indices, you can do that as well. We'll move this forward. So there could be your entry there as it comes back up into price, short into this gap. Stop is going to be 5 points. And we're going to be targeting the next area of liquidity, which you could go for this one if you want it back down to New York, but it's not really a good RR. So the next area would be this fair value gap as your low hanging fruit target. Second would be underneath these lows here or down here. But we don't want to get greedy. We just want the quickest, lowest hanging fruit. See, price comes back up and rejects. Why is it rejecting? We actually have a small order block right here. Force order block. We also have this high, low, higher high, and then we start trading underneath it. Therefore, this one is your breaker. This is your breaker here. So if it comes back up in here, you can also take some second position. Stops up here. You wanted to use this as resistance. You see we don't really go above here. It's respecting this order block and this fair value gap. Gives you a couple more times in case you miss this entry to get in here. And then gives up the ghost. Pretty much head straight to our target and smash for 81 points on the S&P. Like I was saying, you see here on NAS, we had a divergence where this created a higher high. We have lower lows here, suggesting that S&P is weak, giving added confirmation. Now, if you wanted to hold, you could go break even at 5 points here at the midnight open. Let's see, 5. Oh, 5 is a little bit lower. Go break even here and let the rest close partials, let the rest run to this sell side ultimately down here. But I like to get in, get out, because this would pull back, see, pulls back on you, and you're just in this for a while. All morning, we head into the lunch hour, and I think it finally would smack your TP there. And then even just heading down here and see if it takes out ultimately takes out the flat lows down there from the morning. And we probably get a lunch retracement. Nope, takes it out one more time. There you go. And that would be overall TP smashed. And that's your 10 a.m. to 11 a.m. silver bullet entry model.